Okay, welcome to the Swing Trading with Cycles channel. We are going to review the Dixie today. Very important asset, the US Dollar Index. We'll start with the daily chart, and I've been tweeting about this, that we are moving into the weekly cycle decline, which is to say we're in the declining phase of the weekly cycle. Today is October 26th. It's just after 8 o'clock, so the Dixie is just starting to trade. And so we have our Thursday candle now that's starting to form. Wednesday was day 16. I'll take the crosshairs off. So Wednesday was day 16. So you've had 3 days of lower lows after this big bearish outside candle. We talked about that on the previous video. As always, take a look at the links in the description. You can always take a look at the previous video for that context. But we talked about how this pattern here, this bearish outside candle, was just like this one. So we could see a bit of a waterfall, and that's what we're seeing here. And most importantly, we've gone below this level here, which gives us a weekly swing low. We'll move on to the weekly chart to look at that. But this is day 17. So the daily cycle is continuing to decline. And that's it. We had talked about us being in weekly cycle decline. We'll talk about that when we get to the weekly chart. But let's just make sure we understand what's happening on this daily chart. I also tweeted about this, that this day 13 high was a double top. What I mean by that is we had, this is day 1, 2, 3, 4, 5, 6, 7. So we had a high on day 7, and then we started to decline. Well, really, this was more of a consolidation than decline. And then we had this big bearish outside candle where we made a new high. So we made a high just pennies above this one. That's why day 13 is marked as your daily cycle high. But that's deceptive, right? Because technically, the daily cycle high was day 7, and this is a big bearish candle. So a big bearish outside candle. So it's like a false high. It's a false breakout is what it is. And so that's important to sort of acknowledge. It does look like we've started the day green. It's obviously only started trading for just a few minutes. We did make a lower low, and so this thing is trying to consolidate here. But after these 3 candles of down, not surprising that you might try to bounce a little bit. And if we look at the weekly chart, this is where it gets really important. So we knew we had a potential ICH on week 17. And these 3 weeks didn't really produce the downside, the follow through that we're looking for, and now we're finally getting it. This is another swing high. I hope that's clear below here, right? Or I should say this is another weekly low. Think about it as below this whole cluster of lows forms a swing high, and really below this low is where you're really in trouble. And I also called out, just thinking about the structure of this chart, this weekly candle from week of September 19th is kind of holding this whole rally up, right? We had a big move, and this whole thing you could argue has just been consolidation. Now this was your first hint of a false breakout, and now we're getting the downside. Now, breaking below this low is an important signal. That would not quite coincide with a monthly low because it'd be right here, but that would be your best bet that we're probably going to get a new low on the monthly. So that level to watch is 109.355. And as I talked about, a put spread is a good move here. We talked about that maybe in the last video or maybe the one before, but you had a signal. I think you just hold on to that right now. At least that's what I'm doing. And so this is week 21. That's the thing. We're getting late in the weekly cycle, so we may not get a really long decline. Here's where it gets kind of complex. We could see a world where we get a weekly cycle low, we get a bounce, and then the next weekly cycle is also left translated. That would be your ultimate kind of bear case. I guess you could also get a protracted weekly cycle decline. It's week 21. Maybe we even get that weekly cycle that's like 25, 24 weeks. So we get another 3-4 weeks of decline. What you're really watching for, the most important level, is your monthly chart, right? And so why is that? It's because month 20 is your high so far for the 3-year cycle. 3-year cycle, 3 years, 36 months. And so month 20 is a potential high for the cycle. That would imply that we're going to decline for something like 16 months. That isn't my base case because of the strength of this move. This could very well be just a pullback in that move that's going to end in a higher low on our way up to 120. That is my base case. I'll be looking for a move to get out of the put spread and get into a call and to just probably just calls straight up for that move, for a potential move to 120. But we'll have to see a signal there. Now, the low from last month was 107.68. That's a good bit down from here, right? Especially for a currency. But until we get down there, you can't really expect a very protracted decline. That's your level. And then one thing I wanted to call out, there's a lot of conversation about trend lines. In my mind, when you think about higher highs and higher lows instead of trend lines, you are factoring the trend line in, right? Like if you draw a trend line, like let's try to draw one here. So let's say, like you could draw something like that, right? And you're like, oh, well, it has to, it's going to break that, right? Well, guess what? For it to break this trend line, doesn't it have to make a lower low below the low from the previous month? And so I prefer to use that as my signal and not wait for this kind of arbitrary line here. And not to say that there's no value in it, but you're going to break the previous lows from previous candles before you get to any trend line. And so that's my base, like just general principle about analyzing price action. Higher highs and higher lows. You want to see if you're taking out the lows from previous candles or taking out the highs from previous candles, or possibly doing both. That's what an outside candle is, and seeing what direction that goes in. So that is your big level. And just to put a finer point on it, if and when we go below that 107.68 level, that would make month 20 a monthly swing high. And that's what we would need for us to consider this the potential top for the 3-year cycle. I don't think that's what this is, but again, we would need to see a monthly swing high before that happens. So that's a really important signal. And again, it's going to give you that signal way before a trend line. And so that's the sort of math on the Dixie. You could see a world where we at least test that level, so the low, the high 107s, and then maybe there's a little bit of a bounce. Maybe even we cut below it and we get a false breakdown. That's what we're going to want to watch for. But at some point, this thing is going to pull back hard into the 3-year cycle low, is my guess. And you can see this 50-month moving average, which is what this line is. It's moving higher, so it's going to be closer to price when we finally get that top. But you can imagine we're going to slice through that. It would be my base case. So the other thing to keep in mind is that because of this decline in the Dixie, we're starting to see a rally in things like crypto, etc. So those are things to watch. I think EEM is actually waking up as well a little bit. Well, that actually has the China problems as well. But we are green on the week. So that's the lay of the land for the Dixie. Does appear to be moving into a weekly cycle low. We probably test that 108 area. And then it's a question of, does that hold? Do we get a false breakdown? Do we get a more protracted decline? Again, this is week 21, so we're already kind of late in the weekly cycle. So that's the Dixie, folks. Thanks for watching.